After yesterday's drop, Amazon is now 16% down from its yearly high, Facebook down 15%, and Apple down 12%. So which tech names should investors buy on these dips? D.A. Davidson's Tom Forte is here to tell us. No pressure, Tom. It's good to have you. Let's start with, are there any that just kind of immediately jump out to you as, undervalued, oversold, names that investors definitely want to pick up here?
Sure. So thanks for having me, Kelly. When I think about the sell-off, the one standout to me is Apple. When you look at the current multi-year benefits they're going to have from this slow but sure build out of 5G, their most important product from a sales and profitability standpoint, the iPhone, is incredibly well positioned. So well positioned that I think better than expected sales there could offset lost revenue when you think about in-app purchases from the lawsuit with Epic Games. So I really think Apple's amazingly well suited after the pullback.
And you've been raising your price target with a buy rating for over a year. Is 175 still your latest thinking? We're at 141 right now.
Yes, it is.
Tell me about that and whether you have any of the concerns that have been weighing on the stock for the past year, whether it was just the hangover post-pandemic, questions about the competition that's out there for all their different services, the future of the App Store. I mean, are none of those overly significant to you?
Well, okay, so I do think that the antitrust regulatory risk is very significant for big tech. You've talked about that today with Facebook and the whistleblower. We've watched the damage in real time in China, in particular for Alibaba. But if you look at the challenges facing tech right now, in particular the supply chain, Apple seems to have a better handle on it than its peers in either managing the chip shortage or managing logistics inflation. So I think in that regard, when you think about that setup, and again, very strong iPhone sales, Apple, I think, is different from the others in big tech and very attractive on the pullback.
So tell me if I'm reading your thoughts here correctly as well. You think some names like Apple have big upside potential, but it's also on your list that could have downside potential here too?
So the risk in general for tech is rising interest rates due to concerns on inflation. And if you look at the good news in most of tech, while Apple's warmly embraced the debt markets, there's a lot of tech companies that have no debt on their balance sheet. And again, I think that Apple's done a better job of managing the challenges as far as supply chain shortages, logistics, things of that nature. Yes, the lost in-app purchase revenue on the Epic Games lawsuit is bad. But if you think about stronger iPhone sales, it being the most important product, and a much more robust Apple TV Plus subscription video on demand effort for Apple, that could offset the lost revenue from in-app purchases.
All right, so those are some of the risks. You have others on your list that you think could have downside potential. It looks like Overstock, maybe Sonos, Wayfair, and others. Do they share the same concern, or are there different factors?
So when you think about the downside risk in tech, I like to look at our coverage and compare the enterprise value to sales multiple versus historical. So the names you mentioned there, Wayfair, Sonos, and Overstock, they're trading at premium valuations versus where they have historically. That's why I think there's downside. The good news for Overstock and for Wayfair is that both have done a really good job leveraging strong home category. So to the extent that you have kind of a give and take now with consumers spending more on travel, that could present issues. But if you believe, like I do, the home category stays strong, then Overstock and Wayfair should be more than okay. Sonos has the advantage on supply chain where their consumer has shown a willingness to wait for their products, even if it takes longer to get them.